Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Trying again, the U.S. and Iran are said to be discussing a new round of face-to-face talks ahead of the ceasefire expiry next week as both sides try to cement a longer-term truce. Oil prices falling on those revived hopes for an Iran peace deal, even with a U.S. blockade of the Strait of Hormuz now in place. And HSBC CEO warns the conflict in the Middle East is beginning to dent global confidence. We hear exclusively from Geordin Hill-Lewis on why he thinks the region remains resilient. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Green on the screen this morning on anticipation of perhaps another round of discussions to take place between U.S. and Iran. I should say, though, that this has not been confirmed neither by the U.S. side nor by the Iranian side, but plenty of media reports overnight, including our own, suggesting that there is a desire to push forward with those discussions. So that has been taken well by the market. Of course, on the flip side, we know that as of yesterday afternoon, that U.S. naval blockade of the Strait of Hormuz has gone into effect. But this morning, the read across the markets is one, I would say, of relief and of risk-on sentiment. S&P futures not doing a whole lot, but the handover from Asia was pretty positive. And take a look at the European Open. European markets pointed to open up about 0.4% higher as we head into the European session. And of course, that namely is on back on the prices, the price falls that we're seeing in energy markets today. Two key energy markets that we've been focusing on throughout the course of this war. Brent, obviously, $98 now, so shifted below a triple digit, so down 1.3% on news of the possibility of another round of discussions, and really not a lot of activity around the Strait overnight. We'll get to that in a second. And then European gas, which is now, I should say, has extended trading hours, so it is actually now live during our show. There around 45 euros, we are down 2.3%. So again, key energy indicators trading lower today. The handover from risk assets, pretty positive as well. Let me just switch over because there's something else I want to point your attention to. I was talking about S&P yesterday and the fact that we were sitting very close to all-time highs. Well, guess what? We have fully erased now the losses that we have seen since the beginning of the war. So S&P is essentially flat since the war began on February 28th. So there you have it. You know, the biggest decline we saw was towards the end of March. But since then, as we've talked about, potential for diplomacy, the diplomatic channel, and of course the ceasefire, which is still holding, we have been steadily climbing again. So that's the S&P for you. Let's also check in on markets in Asia this morning. Min Low is in Hong Kong for us. Min, walk us through it.
Hey, Jumana, I love that chart. It really shows you that investors are now convinced that at some point President Trump is really intent on extricating itself from this costly war here. And you take a look at the screen, it's pretty remarkable that 7 weeks into the war, we are seeing record highs on the TAIEX up at 2.3%. Even the Kospi now pushing above 6,000 level. The Nikkei as well. I mean, it's just risk on across the board. It looks like investors are just looking past that temporary blockade of the Strait of Hormuz and looking towards those potential trade talks, right? Two different trade talks, ceasefire talks, I should say, not trade talks. Two different talks that we are looking ahead to Iran and, Israel and Lebanon, a talk that is going to be hosted by the U.S. on Tuesday, and then potentially direct talks between U.S. and Iran. Again, President Trump saying that Iran has reached out for talks, even though Iran hasn't confirmed that. And just to show you how strong the rally has been, yes, a lot of it is driven by tech, but not just the big names like SoftBank, SK Hynix, and Samsung, but also the software stocks. You flip the board and take a look at this sector that has been so battered over the last few days because of the displacement caused by Anthropic, for example. It's been declining over the last 3 days. We are seeing these stocks rebounding to the tune of 6-7% here when it comes to Kingdee, WiseTech in Australia as well. Ju?
Nice to see some green on the screen. I gotta say, Min Low in Hong Kong, thank you so much. Well, the U.S. and Iran are said to be making efforts to return to the negotiating table after meetings in Islamabad over the weekend ended in failure. Sources tell Bloomberg the goal is to resume talks before the fragile ceasefire announced last week expires. The development comes after President Trump escalated tensions by ordering a U.S. naval blockade of the Strait of Hormuz.
Right now, there's no fighting. Right now, we have a blockade. They're doing no business. I didn't like seeing boats come out if they were doing business with Iran, but if they weren't, no boats came out. So now Iran is doing absolutely no business, and we're going to keep it that way very easily. Don't forget, their Navy is gone, their Air Force is gone, their anti-aircraft is gone, their radar is gone, and their leaders are gone.
Well, joining us now is Bloomberg's Ross Matheson. Also with us is Stephen Sachinsky, who leads our Asia energy coverage. Ross, I'm going to start with you. And I was just recapping the market price action this morning. Some optimism that there may be another round of discussions taking place between U.S. and Iran. What do we know?
Well, that's right. So despite all the very heated rhetoric that's going on between the US and Iran, there does seem to be this window potentially to resume a conversation, space for talks to go on. And we're hearing that there is a push towards having that, especially before the 2-week ceasefire expires. Of course, coming against the backdrop now of that blockade of the Strait of Hormuz by the US, that's to stop any ships stopping or picking up at Iranian ports, not just going through the strait. But certainly that's been an effort to perhaps, to escalate in order to de-escalate. So within all of that, can you find a framework for talks? And are we going to come back to the table with the same fundamental issue over Iran's nuclear program? Of course, even before this conflict broke out, there were years of talks involving Iran's nuclear program, always failing to get to an agreement. Is there now pressure to actually find a way through? Of course, it seems there's a difference over how long Iran would have to essentially suspend its nuclear ambitions, 5 years or 20 years. Iran obviously wanting the shorter end of that. So that's going to be the focal point if or when they can get back to the table.
And Stephen, the other big development is the U.S. naval blockade of the Strait of Hormuz, or at least Iranian ports, has gone into effect. Walk us through the activity overnight. What's gone down around the strait?
I mean, there's not much activity at all, which is the news, right? There had been some activity picking up over the last few weeks. Now, we weren't at pre-war levels of ships going through the Strait of Hormuz, but we were at, 5, 10, sometimes more than that, ships going through on a daily basis last week and over the weekend. Compared to about 135 plus before the war began. But that was progress, at least according to people viewing the market. Now, in the last 12 hours, since effectively Trump's blockade or extended naval activity in the region has gone into effect, you've seen that drop pretty significantly. So there was one ship that went through. It was kind of already going through when the blockade began. And then there's another Iran-linked ship. It was sanctioned by the U.S. in 2023. It's right now kind of making a run for it. If you look at a map, it is going right through the strait, and it's unclear whether or not it's loaded, but it is Iranian, and it has been sanctioned for being part of the Iranian trade in the past. So will the U.S. try to stop this ship? Will they board it? What they had done with Venezuela months back. So that's something that I think the market is watching very closely, because this is a test, it appears. And if this test is successful, it indicates that maybe Iran is still able to get some crude out, and maybe the Trump administration won't risk escalating the tension with Tehran at the moment.
Okay, so let's keep an eye on that over the next couple of hours and the fate of that tanker that's going through. Ross, let me just come back to you. Assuming these second round of talks do take place, what do we understand are going to be the critical issues that are going to be discussed? And obviously a lot of emphasis on the Strait and the nuclear files here.
Well, that's right. So the key sticking point seems to be the nuclear program and fundamentally what to do about it. Iran says it doesn't have the intention of building a nuclear weapon, despite what the US is saying. They don't want too many limits on their enrichment program. Again, the difference seems to be, could they call time on their enrichment program for 5 years, or for the longer term, the US seems to want some reports up to 20 years. So quite a lot of differences there to bridge. But there's also all those other questions that will come into this conversation involving, for example, Iran's weapons program, what's left of it, its ballistic missiles, what are left of those, and also its proxies in the region, because, of course, one key issue here is Lebanon. Israel saying its campaign against Hezbollah, the Iranian proxy in Lebanon, is not part of this ceasefire arrangement, and there are going to be separate conversations about that. But certainly that's a sticking point for Iran in particular. Why is there no ceasefire understanding around Lebanon as well? So you can imagine that will come in to those conversations if they do resume in Islamabad or somewhere else before the ceasefire. So again, the Strait of Hormuz, obviously, the nuclear program, but also what's happening in Lebanon.
Roz, thank you so much. Bloomberg's Roz Matheson and Bloomberg's Stephen Sachinski, who runs our Asia energy coverage. Thank you. Joining us now is Aditya Saraswat, MENA Research Director at Rystad Energy. Once again, markets today are reacting to all of the headlines around Iran and the potential for discussions. I guess, the question still stands. Even if the war comes to an end tomorrow, how are energy markets like to factor in the 6 weeks ongoing supply disruption that we've already seen passing through the Strait, and of course the anticipation of further delays down the track to do with actual physical damage that's been sustained at many of these energy infrastructure sites?
Hi, Jomana. I think it's a great point that you have raised, because even if you look now, the futures and physical markets have sharply diverged. The gap is the most important signal in the market right now. Right now, the Brent is futures near 898.99. That reflects some diplomatic hope, but the physical dated Brent is at 130, with intraday reaching at around 144, and that reflects actual supply reality. Even if there is a resolution now, it will take a couple of weeks to instill confidence among the logistics, vessel players, and operators to instill comfort on the backdrop of any durable resolution. And that would set the scene for recovery from there. So the short answer to that is we are months away from actual reinstating, even if the resolution is released tomorrow. And it will take months, because you would have to do a triangulation of not only getting your storages out, which are running at critically high levels. You have to get the vessels back, because there's essentially a traffic jam, so to speak, right before Strait of Hormuz, and then you have to get the wells start to flow again. So that triangulation will take months before everything normalizes.
Yeah. Well, what is your view of the U.S. blockade that went into effect yesterday? How is that affecting dynamics in the market, if at all?
I think right now it's a strategy where all of the factors are playing all together. You have tariffs, you have trade impact, blockades, everything playing all together. And historically, there is no analog to this sort of event that have taken place all at once. So essentially, we are moving towards the brinkmanship, where you escalate to de-escalate, and in a hope to find a resolution soon. And that's essentially what the current prices are also indicating, that there could be very well a diplomatic resolution soon. But then there are complexities already emerging over the last 24 hours. You have an entry of China and Russia into the picture. We have seen the Veto Act. We have seen Russia entering into the nuclear equation. Despite the blockade, we are seeing claims by the Chinese that their ships will continue to transit. How and when? The big question is, will there be a confrontation or some sort of halting of Chinese-linked vessels that will set the trajectory of prices and the markets moving forward? But the most important part, again, is the supply disruption is real. The market is not absorbing it as we speak, and the need to reach a durable resolution, the time is of essence there.
Yeah. Were you surprised at the OPEC figures that were released yesterday for the group as a whole, signaling a month-on-month decline in production of more than 20%? Some countries like Iraq disproportionately hit. Are these numbers in line with the market's expectations?
Yes, they are, because the immediate floor we have seen right after 7th, 8th of March, a week into the conflict, more or less, the immediate floor to the falling production was their refining capacity. And right after that, we are seeing further reduction in production, because then your product shortages are filling out. And Iraq, Kuwait have great deal of dependence on Strait of Hormuz, unlike Saudi Arabia and UAE, which can divert some of their flows through Red Sea and Indian Ocean. But we are completely in line with what sort of figures that came out. And I think this month, April would be hit even more in terms of absolute levels, because now there is no sort of pressure valve opening that we are seeing. And we could see the production staying at such lower levels. So we could see further drop in the absolute April levels in the next reporting. And that's essentially the entire risk there, right? Because even if you have surplus capacity, roughly a portion of the 20 million barrel per day of flows are impacted, are being diverted. Sorry for that. But there's no sort of replacement to that. Even if there's a diversification attempt made by the US to attract buyers, but there's no like-for-like grade, and there's not enough capacity to replace it. And that's essentially your energy security concern entering into the second month of this conflict.
Yeah. Aditya, thank you so much for the insight. Really fascinating to hear from you. Aditya Saraswat, MENA Research Director at Rystad Energy. Well, coming up, we speak to RBC Wealth Management about their outlook for the UK and Europe as the war in Iran raises inflation prospects. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Fed Governor Stephen Miron says the energy shock triggered by the Iran war has yet to impact longer-run inflation expectations. For more, joining us now is Rufaro Chiriseri, RBC Wealth Management's fixed income head for the UK and Europe. Maybe let's just pick up with some of the commentary that's come through. Obviously, Stephen Miron, we know, is in the dovish camp, but he does make a good point in that we have seen a short-term inflation shock, or yet to be seen the full impact of this inflation shock, but it's not affecting longer-term inflation expectations. So why have we seen such a big move upwards in medium-term and long-term yields?
Good morning, Jumana. I think one of the key things when we think about the US and we look at the inflation picture, I think we still have some of that tariff pass-through to come through, and our economists sort of see inflation peaking in sort of Q2 region. They've recently upwardly revised their inflation expectations, expecting that inflation will trend to 3.7% in sort of Q2, but then trend towards 3% at year end. And with the CPI prints that we had last week, we started to see that there is some pressure in some of those tariff-sensitive areas that we're starting to see coming through. And then even when we sort of look back at sort of the Fed minutes and what we heard from Chair Powell as well, there is certainly a rise in concern amongst, say, perhaps some of the cohorts that were more dovish within the FOMC around that sort of labor market dynamic, that's starting to fade, and it's starting to be a bit more of a focus on that inflation story. So we still think that inflation story is still a risk for the US. And based on that, we still think that the Fed will be on hold for the rest of this year.
Okay, so that's the Fed. I mean, what about Europe? There's been a significant repricing of the front end, accounting for around 2 rate hikes by the end of this year. It really feels as though the market is placing perhaps a little bit too much emphasis on the inflationary shock to come, as opposed to the growth and demand shock that also could ensue.
Absolutely. And this has sort of been one of our sort of strong areas where we sort of cited that even though that inflationary story is problematic for central banks, we certainly see that that demand destruction and that impact on GDP will ultimately be sort of the pushback on how much the central banks can hike. And when we look at the pricing that we've seen in the UK, for example, where we've swung from 2 cuts to and at the peak of expectations at 3 hikes, and for the euro area from essentially no action from the central banks to now 2 hikes, and of course at the peak around sort of closer to 3, we thought in that dynamic that was a bit too excessive because it wasn't accounting for that sort of growth shock, and our expectations in terms of oil sort of remaining around that $100 a barrel and gas prices remaining around 50% higher than pre-conflict levels. In that dynamic, we see the euro area, the impact to inflation will be around 1.2%. And of course, that growth hit will be about 0.8%. And then conversely, when we look at the UK, we see that the UK shock to growth is a little bit lower at 0.6%, and that inflation shock at similar levels. But of course, the UK was coming from a much weaker point. And so we think that growth shock in the UK is potentially much higher than it is in the Eurozone.
Yeah, what about the issuance to come? And, at the beginning of the year, there was a lot of focus on public finances and the difficulty for many, especially European governments, to rein in their deficits for this year. Why is that not being talked about anymore?
I think certainly it's not that it's been completely forgotten by bond investors, but one of the key things that we've noted is that the likes of Spain, the likes of Italy, Greece, we had started to see an improvement in that in those sort of deficit levels, getting them much closer to that 3% level that is in line with sort of EU rules. But of course, what's happened recently may somewhat derail that. But we haven't seen sort of mass sort of fiscal spending coming through from these governments. All the measures have been somewhat quite targeted in line with ECB guidelines. And so we think that sort of dynamic, we're not necessarily expecting a massive sort of fiscal impulse because it's been quite targeted. But of course, a few other governments don't necessarily have that sort of headroom to borrow. When we think of, say, France, for example, not as much headroom there. And of course, Germany has already enacted some infrastructure and some defense spending already. So we already have those deficit levels that are rising. But certainly, we are sort of at that juncture where fiscal measures at the moment are still quite targeted. So it's not necessarily a big risk at the moment.
Yeah, we spent most of the discussion talking about sovereign risk, but let me ask you whether you see this recent bout of credit widening as an opportunity to enter into longs there.
I think one of the ways we've been looking at credit for the past few months pre-conflict is that credit spreads had reached levels that were pretty tight, and we're not particularly comfortable taking an overweight position there, and we've pretty much held a shorter duration position in credit. But given this recent period where we did see spreads widen a little bit, we saw that as an opportunity to add to high quality companies with good fundamentals that had been dragged along with this spread widening, but we continue to see those as good companies to invest in, but still looking at it from a shorter duration perspective. We still have the view that credit spreads could widen further this year, and so that really feeds into our sort of continued underweight position and also maintaining that shorter duration profile as well.
Rufaro Chiriseri, RBC Wealth Management, Head of Fixed Income for UK and Europe. Thank you so much for joining our show today. Now for a look at some of the other stories we're following. HSBC CEO Geordin Hill-Lewis says the conflict in the Middle East and broader uncertainties are beginning to dent client investors' confidence. But despite the geopolitical headwinds, Hill-Lewis is striking a resilient tone.
The important thing to say is we're open for business. We're here to support our customers. We've been, operationally resilient throughout that period, of course, following government guidance and requests, but we are open for business. We've been in this region for more than 130 years. This region has faced challenges in the past. After every challenge, this region has come out of it more resilient, stronger, and with bigger promise for the future. And this time is no different.
Luxury giant LVMH saw sales decline at the start of this year as the war in the Middle East crimped demand for Louis Vuitton and Dior products. Organic revenue at its key fashion and leather goods unit dropped by 2% in the first quarter, which was worse than analysts had expected. The company's CFO notes that performance would have been flattish had it not been for the war. And coming up, we'll talk to Thomas Kazakos, the Secretary General of the International Chamber of Shipping, as the U.S. begins its blockade of the Strait of Hormuz. That's next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Trying again, the U.S. and Iran are said to be discussing a new round of face-to-face talks ahead of the ceasefire expiry next week as both sides try to cement a longer-term truce. Oil prices falling on those revived hopes for an Iran peace deal, even with the U.S. blockade of the Strait of Hormuz now in place. And HSBC CEO warns the conflict in the Middle East is beginning to dent global confidence. And we have heard exclusively from Geordin Hill-Lewis on why he thinks the region remains resilient. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, getting you up to speed on these markets, things are trading with more buoyancy today. So a positive handover from most of these Asian bourses. Some green on the screen. S&P, a strong close yesterday. And of course, there we're paying close attention to earnings season. It's not just the geopolitical considerations and the fact that the market is cheered on by the possibility of another round of U.S.-Iran discussions, but also bank earnings. Yesterday of note, Goldman Sachs, and even though we saw some deep declines in the fixed income side of the business, the equity business more than compensated for that. So still a very strong quarter. Up ahead today, you have more banks' earnings on the slate as well to watch out for. So earnings season also a focus when it comes to the micro side of things in the U.S. European markets seen opening up in the green as well, up 0.4%. And then our key energy indicators this morning, Brent down 1.5%, sitting at $98 or just a little bit below. And European gas futures, which now trade in our time zone, that's a new thing, a new development this week, down 2.6%. So they're really reacting to, once again, the headlines emanating from the region. And I will say, despite the fact that the U.S. has now officially started its blockade of the Strait of Hormuz, very few vessels are passing through. And we speak about ongoing tightness, especially in the physical market, in those physical oil markets, as we were speaking about with our guest. Hence why Brent is still very close to $100. And then switching over just to Mark, the S&P has fully erased the losses since the beginning of the Iran war. We are basically flat since levels we were at before the war started, and tells you what I was saying at the top, that it's very headline driven. Investors are looking ahead. There is some expectations that we will get some form of a breakthrough diplomatically as the ceasefire in the region holds up. And then the outlook for earnings seems to be pretty positive as well, with analysts expecting EPS growth of around 13%. So that's your S&P takeaway. All right, let's also check in on how markets in Asia are faring as well. Min Min Lo is in Hong Kong for us. Min Min.
Hey, Jomana, speaking about that blockade at the Strait of Hormuz, as you said, we are getting the first snapshot of how that is impacting trade data in China in March. You take a look at this huge surprise here. Exports collapsing to just 2.5% gain versus the previous month of 40%. Bear in mind, this was quite an anomaly here. This is much higher than usual, perhaps because of the U.S. Supreme Court striking down those Trump tariffs. And then you have imports, huge increase of 28% or so. This is also very unusual numbers, and you got to think about how much of the energy price spike, the industrial metals price spike, that is probably feeding into this imports number here, because typically we would see exports far outperforming imports. This time it's the other way around, and obviously those shipments, the logistical challenge of sending shipments towards the Middle East, all of that would have played into these numbers here as well. And you take a look at how Chinese markets are trading today. They are largely shrugging off this data. And just to give you a sense of how split investors and analysts have been, right, that trade data that you saw earlier when it comes to the dispersion of the forecast is the highest since 2020. We're talking about forecasts ranging from negative 10% to positive 24%. So investors and analysts are really having a hard time figuring out just how much China's trade will be impacted. But here you can see markets are looking pretty calm, right? A lot of optimism around those potential ceasefire talks between Iran and US, between Lebanon and Israel as well. And mostly we are seeing upside here, but not as much as the other regional benchmarks in Asia, particularly the Japanese, Korean. The TAIEX is now at a record high. CSI 300 just up by 0.8% here.
Min, thank you so much. Min Lo in Hong Kong. Well, shipping traffic through the world's most vital oil artery has slumped as the United States begins a naval blockade to intercept and seize potentially Iranian vessels. Only 4 ships were observed going through the Strait of Hormuz on Monday, down from 19 the day before. Let's get more with Thomas Kazakos, the Secretary General of the International Chamber of Shipping. Good to have you with us. First, let me just ask you straight out, what are your members saying about the status of the strait right now?
International shipping, which is represented by the International Chamber of Shipping, of course, is quite concerned with the ongoing situation. And for us, the Strait of Hormuz is a critical artery for world trade, and therefore we are very much hoping that the freedom of navigation principle will be adhered to, as well as international law. So as long as this ongoing situation continues, international shipping cannot function and in the region, and therefore all efforts must continue, first of all, to de-escalate any situation that makes the freedom of navigation and the innocent passage not possible. And therefore, we encourage all parties to de-escalate and work towards finding practical ways to apply the freedom of navigation. And let us not forget, Mana, that we still have a number of ships with thousands of seafarers stranded in the Persian Gulf, which is, of course, our first priority to make sure that, first of all, from the well-being as well as the mental situation is very well looked after.
Yeah. Were your members surprised to hear that the U.S. were also announcing or implementing a naval blockade? What was the reaction to that?
For us, as a matter of principle, we are not supporting of any individual actions that put the freedom of navigation on the innocent passage principles into not being able to be applied, and therefore this restricts any measures that restricts navigation, freedom of navigation for us is not something that facilitates our main mission, which is to facilitate trade. And therefore, as I mentioned already, focus should be in finding ways to de-escalate the situation and allow shipping to provide this major service to the world trade, which is to carry 90% of the world trade, including, of course, the specialized trade we're talking in the region.
Do you have any insight or information as to whether there are actually mines in the strait?
This kind of information is not available to private organizations such as ours, and therefore this is one of the reasons that we are again stressing the need for the establishment of a safe passage through the strait as quickly as possible in order to allow the situation to return back to what it was before, if at all possible, as soon as possible.
Yeah. What about the idea of an escort system? Is that something that would be amenable to your member countries? You know, would they be accepting of a naval escort system?
The best way is to find a permanent solution. The ceasefire that was reached a week or so ago is a positive step in the right direction, and international intergovernmental organizations are working on a system to try and, as soon as there's a real confirmation that the safety of navigation of passage through the straits and the adjacent region will be applied, to implement such a system. So for us, the best way forward is to ensure both in terms of safety, as you mentioned, mines and other possibilities of ships being attacked in the region that does no longer exist. And then only then will be safe for any commercial vessel to sail through the straits.
Yeah. Well, the thing is, the concern here is that maybe a precedent has been set, and the risk of perceived danger, even if there isn't danger, but the risk of perceived danger is enough to deter vessels and ships from passing through the strait. Once the war ends, what is the best mechanism to ensure the safe passage of all ships unconditionally throughout the Strait of Hormuz?
This is the situation that applies not only in this strait, but in all similar other important passageways, water passageways. For many, many years, for centuries, shipping has been allowed to trade and facilitate international economy. So there's no, wherever there is no restriction of trade, this is where you have the best way forward. Because according to international law, innocent passage and freedom of navigation should be secure for any flag and any ship of any flag. And this is the best way forward. And this is the way it's been applied. And this is why shipping has managed to perform its main mission, which is to facilitate trade. And again, allow me to remind you that 90% of the world trade is carried by sea, by ships. And therefore, this is of paramount importance, first of all, to secure the safety of our seafarers, as well as, of course, the safe passage in this occasion from this particular strait, but also all over the world.
Thomas, a pleasure to have you on our show today. Thank you so much. Thomas Kazakos, Secretary General of the International Chamber of Shipping. Well, HSBC CEO Geordin Hill-Lewis says the Middle East remains a resilient long-term hub for capital despite the conflict. Speaking to us exclusively from the bank's Global Investment Summit in Hong Kong, he described flows out of the region as benign.
There has been a global trend of diversification of booking centers that's been taking place for a number of years now, specifically by our wealth management customers.
Right.
So they've been using booking hubs such as Hong Kong, of course, such as Singapore, such as the UAE, both in Dubai and Abu Dhabi, such as Switzerland, the UK, the US. And they have naturally been diversifying their wealth to be managed across multiple of these hubs, partly to be able to benefit from the expertise that each market brings, and partly as a matter of risk management. That trend continues. Insofar that this is, this concerning the Middle East today, frankly, we have seen very benign movement. I think the resilience of the Middle East as a long-term hub for wealth management and capital has not changed. But of course, everybody's hoping to see the end of the current conflict and praying to see the end of the current conflict soon.
You're also a global trade bank, so what do you see in terms of change, if any, of trade flows? Do you see any of that since this war erupted? And how does it differ from maybe last year when we were talking about tariffs?
So trade has certainly been disrupted. Now, it's been tariffs of 2025 have disrupted trade with the US. This time we're seeing a major disruption in trade far beyond the Middle East, but in particular towards Asia because of the Strait of Hormuz closure. We believe there are multiple hundred, probably up to 800 ships that are still locked up in the Gulf. And, of course, the passage daily, 150 ships, has dropped to maybe 5 to 10 ships at best. So that is hugely disruptive. The impact of such will be felt way beyond the Middle East, and that is one worrying factor for us, not just in price of goods, oil, refined products, LNG, LPG, but also fertilizers, metals, etc. But it's also going to be felt in the availability of such goods. And we worry that a continuation of this conflict will have that impact globally, way beyond the Middle East.
HSBC CEO Geordin Hill-Lewis speaking exclusively to Bloomberg's David Inglis and Yvonne Mann. Well, coming up, the U.S. is set to host rare talks between Israel and Lebanon later today. We'll bring you a preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. The U.S. is set to host direct talks between Israel and Lebanon in Washington on Tuesday, but a Hezbollah official has told the Associated Press it will not abide by any agreement out of the meeting. For more, we are now joined by Bloomberg's UAE Bureau Chief Dana Khresh. Dana, good to have you with us. Setting up to be quite a pivotal day. These are the first in-person negotiations between Israel and Lebanon in decades. Is this performative diplomacy, or could it actually lead to something more substantial and possibly even a peace agreement?
Good morning, Jumana. I wouldn't say performative here. I think especially on the Lebanese side and the U.S. side, they do have an interest in going into these talks, right? From the Lebanese side, they want the ceasefire now. They want the attacks to stop, as that has really wreaked havoc across the country. And for the U.S. side, they need to have some sort of talks between Israeli and the Lebanese side in order to kind of facilitate their own talks with Iran that might actually continue, as we have seen reports from before. The thing is that Lebanon wants to go into these talks and demanding a ceasefire before discussing any other item, potentially a sustainable solution. But we've seen Israeli Prime Minister Benjamin Netanyahu saying that they will not stop the attacks and they will demand that Lebanon disarms Hezbollah. Now, these talks are, of course, fraught, right? There are a lot of issues that need to be resolved before going into the details of how Lebanon would disarm Hezbollah, especially after it failed the last time it vowed to do so. And of course, that led to Hezbollah joining the war on Iran and firing rockets and drones into Israel, and of course, prompting Israel to respond back with a massive air campaign and of course, ground operations that Israel said could lead to the occupation of at least 10% of Lebanese territory.
Yeah. You know, it was interesting overnight. Wafiq Safa, which is he's one of the high-ranking officials from Hezbollah, did tell Associated Press, as for the outcomes of this negotiation between Lebanon and Israel, we're not interested in them, we're not concerned about them at all, and we are not bound by what they agreed to. How much political sway does Hezbollah actually have here in terms of their ability to jeopardize whatever is agreed?
They can, and I think the group sent a signal, albeit a small one, over the weekend when they held a protest outside the government house, which is the Grand Sarai, and protested these talks and said that they would reject them. And the fear in Lebanon is that Hezbollah might actually go ahead and topple this government to thwart the talks. And even if the talks go through and some agreement is made, they will make sure that there won't be any implementation of these talks. Hezbollah is very much cornered domestically and maybe not able to go all out locally and use whatever advantage it has because it is also cornered. You have on one side, it is being pummeled by Israeli attacks, and then a government that banned its military and security apparatus, as we have seen earlier, or 2 months ago, I think. And so it is cornered politically inside Lebanon and also outside. Iran is now in talks with the U.S. for an agreement that could potentially lead to a sustainable solution between the two. But also, it's hard to see Hezbollah disarming at all or surrendering its weapons. It is very much linked to the Iranian regime, not like the Houthis and Hamas are, but they are ideologically linked and almost a partner to the Iran Revolutionary Guard Corps. So these two are very much connected, and a lot of the experts we speak to say it is hard to see Hezbollah surrendering its arms without the collapse of the Iranian regime.
Bloomberg's UAE Bureau Chief Dana Khresh, thank you so much for the preview. Now for a look at some of the other stories we're following. A Paris court has jailed former Lafarge CEO Bruno Lafont for 6 years for funneling money, millions of euros, to terrorist groups, including ISIS, to keep a Syrian factory running. The judge ruled that the Wholesome subsidiary knowingly funded these organizations to protect its $680 million investment rather than exiting the war-torn region as competitors did. Lafarge was also fined nearly $6.7 million. Bloomberg has learned that Pakistan is seeking about $3.5 billion in loans and investments from Saudi Arabia and China. It comes as Islamabad failed to reach an agreement with the UAE to roll over a $3 billion loan. The move threatens to severely deplete Pakistan's limited forex reserves. And Turkey's foreign minister has called for the formation of a Middle East security pact to build trust and stability in the region after the Iran war ends. The foreign ministers of Turkey, Pakistan, Saudi Arabia, and Egypt recently held talks in Islamabad about ways to restore peace to the region. And South Africa is feeling the economic impact of the Iran war, with higher fuel prices starting to feed through into inflation and the broader economy. I spoke with Geordin Hill-Lewis, the new leader of the Democratic Alliance. He told me the timing of the war couldn't be worse, as the country was just beginning to see signs of economic recovery.
We've seen some heavy increases at the pump for petrol and diesel prices. And that's causing knock-on effects, obviously, in food prices and has inflationary effects across the economy, just at a time where, for the first time in a number of years, we've got inflation down to where it should be. So it's come at exactly the worst time. It's also just at a time when this new coalition government I spoke about earlier is starting to drive the economic reforms necessary to actually see the green shoots of growth back in this economy, which has really not grown meaningfully at all for many years. So it comes at the worst possible time. Now, the government has actually taken action. In fact, the party I represent and now lead, the Democratic Alliance, insisted or proposed that the government temporarily cut fuel taxes, and they did in fact do that. So there has been a temporary slashing of fuel taxes, and that's brought some ease at the petrol pumps for consumers, but not a lot. We've still had a significant increase owing to those import prices. So that's why, the state has got no fiscal room to do more. We can't ease those fuel taxes any further. So really, our firepower to try and shield consumers is already used up. It's already spent. So it just underscores the need to draw the conflict to a close as soon as possible, so that we can get a return to some normalcy in energy prices. Yeah,
and before we move on and talk about domestic politics, I also just want to draw on your expertise being mayor of Cape Town before you took on this new role.
Yes.
The closure of the strait has been, again, a huge development with a huge amount of repercussions on some of those markets that we were just referencing. And I wonder whether, from South Africa's perspective, actually it has presented a maritime opportunity, and whether just, you are detecting higher levels of activity of ships docking, refueling around the port. What is your sense of whether this actually creates an opportunity for a country like South Africa?
Yes, that's actually true. You are right. Looking out at Table Bay, which is our harbour in Cape Town in South Africa last week, I can't remember when last I saw so many ships parked in the bay waiting to dock at Cape Town Harbour. So it is definitely the case that one of the kind of stranger offshoots of this conflict is actually that it is you described, I think, perfectly, a maritime opportunity for a port city like Cape Town. And I hope that we are maximizing on that opportunity right now. And I have no doubt that our shipping companies and ship supply companies and repair companies and so on are doing exactly that. But let me say, obviously we must take every opportunity that we can get in a society with very high unemployment. But still, the costs to the wider national economy of a massive fuel price crunch are far greater than the opportunity for Cape Town from the greatly increased maritime traffic. So I still think, it's while we must convert those opportunities, we still want to see this conflict over as soon as we can.
Well, that was Geordin Hill-Lewis, leader of South Africa's Democratic Alliance. Let's turn back to markets now, because it is shaping up to be another day of green for global equities. And I think this is, in fact, the 8th day in a row that we're seeing broader global equity markets end up in positive territory. So a lot of headlines coming through from this part of the world. But this time around, people are really focused on the possibility that we could see yet another round of US-Iran discussions, perhaps even as soon as this week. The ceasefire is holding up. And as for the naval blockade, not a lot of activity on the Straits overnight. So you could say that perhaps the worst case scenario has been averted for the time being. European markets look like they're going to open up 4/10 higher. And let me just leave you with a snapshot of how some of these key energy markets are faring, and oil once again in focus. But we have slipped below $100 here. $98 is where we're at, down 1.5%. WTI also down 2.4% as well, on possibility of yet another round of talks, as we were speaking about. That is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with me for Daybreak Europe. That's coming up next. This is Bloomberg.